welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Olivia Grace-Curran. US stocks rallied on Friday as investor optimism grew over the health of the economy and path of interest rates, with traders bracing for a slew of policy changes under the incoming Trump administration. All three of Wall Street's major indexes were up for the day, while the S&P 500 and Dow registered their biggest weekly gains since the week of the US presidential election. Nvidia gained 3.1% and Broadcom advanced 3.5% after Barclays raised its price targets on the stocks, helping boost the semiconductor index. Intel shares popped more than 9% on speculation of a takeover following the departure of its CEO in December. Social media stocks, including Meta, edged up 0.25% after the Supreme Court ruled against TikTok's challenge to a law that would force its app's sale or ban in the United States, while shares of Snap dipped more than 3%. Crypto stocks jumped amid reports President-elect Donald Trump could release an executive order making crypto a national priority as soon as the first day of his new term. Life360 location-sharing app stock rallied after UBS upgraded it to buy from neutral, citing more confidence in the company's midterm ad revenue opportunity. Investors are eagerly awaiting Trump's inauguration speech on Monday to gain clarity on the course of the incoming administration's policies on tariffs, tax cuts, and immigration. US Treasury yields drifted higher on Friday in a choppy session on upbeat economic data, backing expectations that the Federal Reserve will slow the pace of rate cuts and likely ease just once this year. Benchmark US 10-year notes rose 1.5 basis points to 4.621%. US manufacturing output increased 0.6% last month after an upwardly revised 0.4% rebound in November, likely boosted by the end of factory worker strikes. As the Federal Reserve prepares to enter its blackout period, Cleveland Fed President Beth Hammack says inflation remains a problem, with recent data pointing to a resilient economy. Meanwhile, Trump Treasury Secretary Pick Scott Bessent has said the Federal Reserve should remain independent of the president. The US dollar has strengthened against major peers after 4 days of declines, causing the Aussie to fall, now buying around 62 US cents. And Bitcoin hit a 4-week high on Friday, but it's currently trading around 102,000 US dollars. Oil prices settled lower on Friday, with traders concerned about more supply disruptions as Trump returns to power. Brent crude futures dipped 50 cents to 80.79 US dollars per barrel. Sanctions on Russia are causing tightness of supply in Europe, India, and China. Trump's pick for Treasury Secretary says he is ready to impose tougher sanctions on Russian oil. Gold prices were pressured by an uptick in the US dollar on Friday, the metal benefiting from uncertainties over the incoming Trump policies and renewed bets of further rate cuts. Spot gold eased 0.4% to $2,701 US dollars an ounce. For more on what's moving global markets, Greg Smith from Devon Funds joins me now live from Auckland. Great to have you on AusBiz, Greg, and Happy New Year. Of course, we haven't seen you since 2024. Well, US markets had a good week last week. So how do you see things playing out near term and under Trump 2.0?
Yeah, sure. And hi, Olivia, and great to be back, and Happy New Year to you, all your viewers as well. Quite a few markets have been a bit of a lull the first early part of January. Obviously, a pretty strong performance last year, but as you mentioned in the lead, and it's been the best week for the US market since the presidential election. So, yeah, the focus on Trump. We've got the inauguration Monday US time, so early as of tomorrow, our time. There's not a lot of economic data this week, so I think there's going to be a lot of focus on that. I think he brings unpredictability to the equation. I think in the Southern Hemisphere we're going to be back to wake up to see what he's put on social media over the night. But I think at the moment investors and markets are focused on the pro-business tailwinds. So you're talking lower taxes, you're talking deregulation, and just the fact, the markets last time around under Trump 1.0 did pretty well. Look, and it's not going to be all positive, I think, but at the moment, the focus is on those positives. I think an interesting thing will be what he does with the executive orders they sort of promised literally in the first sort of day in office. He's talked about rolling back by the Biden administration's immigration plans. He can already, I suppose, claim a little bit of a win with the peace deal in Gaza. But I think the big thing for the markets are those sort of pro-business initiatives and taxes, but and also deregulation. There's going to be a lot of tech execs at his inauguration, so I'm sure they'll be hoping for the best sort of outcome this year. But look, at some point, I think there will be a look at the other side of the equation. Debt levels potentially going up, and those inflationary implications of his policies. And if it sort of rolls out the predictions sort of this time of year or a little bit earlier, one of our top 10 is that inflation or the last mile is going to be proved to be a little bit stickier than some had anticipated in the US. But there's potentially a story for another day as far as the markets are concerned. Of course, last week we did have a pretty good reception to the CPI and the PPI numbers, which came in a little bit better than expected.
And Greg, how important will the earnings season be, and what about the Fed? What's your thinking there?
Yeah, so just on the earnings season, it's early days. We've just started really, but it has got off to a good start. As always, the banks sort of tend to set the tone. And great results from Goldman, Citigroup, JP Morgan. You saw double-digit gains or 12% gains for Goldman's and Citigroup last week. JP Morgan Chase was up 8%. It was interesting, looking through the commentary there. Their CEOs really talked up the positive environment and the confidence that increased meaningfully post the election. So I think that was well received by investors. So it'll just be interesting to see whether that filters throughout the rest of the earnings season, because Trump hasn't suddenly waved the magic wand and everything is sort of hunky-dory, as it were. But it'll be interesting to look at those themes. I suppose moderating inflationary pressures will be sort of look for what the top line's looking like. A lot of investors have been making earnings, so a lot of companies, should I say, been making earnings gains through taking out costs. So the earnings season will be important as ever, but off to a good start. In terms of the Fed, we've got that meeting at the end of this month, so I think any sort of changing views with respect to inflation will be sort of dwelled upon, and then also be takeaways from that earnings season. The minutes that we had recently from the last meeting, they did tip the hat to the inflationary impacts or potential inflation impacts of a Trump presidency. So I think it's be really interesting to see what they say at the end of the month. And again, I just think the market's pricing in a little bit in the way of rate cuts this year. I mean, time will tell if we actually get that. I think we might get a few less than what investors are expecting, but we'll have to wait and see there.
Okay, and how have things started off over there? You've had some prints, including New Zealand manufacturing, which looks like it's not going so well.
No, that's right. So our manufacturing sector has been in contraction for 22 consecutive months. So we had a printout there on Friday. It's I suppose, and at the same time, we've got a services printout due out here today where things are pretty tough in New Zealand. I mean, we're in a per capita recession. We're in a full-blown recession. We're looking for a lot of help from our Reserve Bank. We're in a slightly different position from yourselves in Australia, and I think where things are going somewhat better. But manufacturing is really tough. You've got the economy in a tough spot. You've got very little growth, or no growth, negative growth, in fact. You've got that flowing through to consumer spending, which is very tight. We've got elevated levels of mortgage debt. People are only starting to see the impact of those rate cuts in the RBNs last year, and that's all feeding through to manufacturing. So the other unwelcome part of that read that we had there, Olivia, was it was the first time in the survey's history that all 12 months of the year, all from January to December 2024, were in contraction every month. Now, the last time we got even close to that was in the GFC, and that was 9 out of 12 months. So things are pretty tough here. If I look at the positives, there were some bright spots. It looks like new orders are picking up a little bit. the overall mood is getting a little bit more positive. I think that has a lot to do, with the rate cuts that we saw last year, and I think will continue this year. The RBNZ here doesn't meet until late February, so they'll be very interested in sort of prints between now and then. Manufacturing sector, though, we're looking for very modest growth this year of 1%, but that would be some way better than the 2.7% contraction last year. So we're needing some help from the central bank over here, Olivia.
And you've got an inflation print in New Zealand on Thursday. How relevant will that be?
Oh, that's really relevant. So, unlike Australia, we don't get monthly CPI data. We get parts of the basket each month, but we have to wait for the quarter to actually get our CPI print. So there's a bit of time to sort of digest it. So we've got one due on Thursday. That's for the December quarter. Inflation expected to hold at around about 2.2%. And I think the very relevant thing there is that inflation is towards the lower end of the RBNZ's band. So as long as we get that confirmed in the quarterly print, I think that's going to give them the runway to act late February when they sort of regroup. So highly important. If we see the number coming too high, that might be a bit unnerving to our market, which had a quite good performance last week as well. The NZ50 was up 1.8%. We've also got a dairy print as well out this week. So the dairy sector is one aspect of our economy that has been going pretty well, but the last two dairy auctions were on the negative side. So I think that'll be very much in focus as well.
And what else is on your radar this week?
There's a few things where the Bank of Japan are sort of a bit out of sync with other central banks in terms of potentially looking to raise rates. So they've only just started after a decade raising rates last year. They're more concerned about deflation than inflation. We've got the earnings season continue to roll on. We've got Netflix, we've got 3M, we've got American Express, and a couple of big healthcare names like J&J. So they're all bellwethers, they're important. But the big focus in the next 24 hours or so will be that inauguration, and particularly those executive orders that Trump potentially may sign. And I guess TikTok users in the US will be pretty interested to what he does there and whether he brings that back to light after it went dark over the weekend.
And I've read that the New Zealand share market is benefiting from a boost in tourism. What appears to be behind that?
Yes, we've got a lower currency, so that's sort of helping our exporters, but it is also helping the tourism side of things. Very important industry to us. I mean, it's a bit challenged as well. I mean, and that flows through yet more tourists. It also helps areas like hospitality, which have been doing it really tough. But I know lots of people have been sort of flocking to Japan with their currency being quite low. But I think we're starting to see a bit of a pickup as we're here as well. And we've got some visitor data later this week as well, so that'll be interesting.
All right, thanks so much for your insights, Greg. Greg Smith from Devon Funds. Now, taking a look at the local market before we go, SPI futures are up 28 points. Well, that does it for this edition of The Global View. Stick around, the Open is coming up next.